Well, welcome back to our special broadcast of the 2018 budget. Before we continue with our analysis here, here's a wrap-up of the speech.
This is South Africa's budget in a nutshell. South Africa hopes to raise an extra 36 billion rand in taxes this year. It plans to cut back spending by 85 billion rand over the next 3 years. The big story this year is that VAT was raised for the first time since 1993, up to 15%. The top 4 income tax brackets will stay the same. Excise duty for motor vehicles will increase from 25% to 30%. Estate duty will now be 25% on estates worth more than 30 million rand. Luxury goods tax up from 7% to 9%. A big one is 57 billion rand towards free higher education over the next 3 years. 12.7 billion of this to help poorer students this year. Social grants for those who can't work go up 7%. 10 billion rand for drought and public infrastructure. And finally, a boost for entrepreneurs with 1.4 billion to support small business. In a nutshell, Finance Minister Malusi Gigaba admits there is still a 48.2 billion gap in the country's finance. He called it a tough but hopeful budget.
Well, let's actually take a look at how the market has reacted to that tough but hopeful budget. Well, as you can see, a mostly positive reaction there from investors, and the likelihood is that it's because it looks like this budget has averted South Africa from being downgraded by all 3 ratings agencies. Of course, Moody's was the only one to still have us on investment grade. We're waiting to hear from them, but most of the economists that we have spoken to so far say this budget was the budget that perhaps will give us more time. But let's get more into the tax implications or the tax changes that were announced just shortly by the Finance Minister. And joining us for an understanding is Erika De Villiers, who's the head of tax policy at Sait, and Tracy Brophy, who is SAICA National Tax Committee Chair. Ladies, thanks so much for your time. Perhaps we begin with your impressions of the entire budget, what he said.
From my perspective, I think given what the position is that the country is in at the moment, this was quite a well thought through budget. Some extra taxes had to be found somewhere, and quite a significant amount. So that was not an easy task. And VAT is a very broad-based tax and a very efficient tax to collect. So increasing the VAT rate by 1%, while at the same time giving a little bit of relief for the poor by way of increased grants at a greater than the inflation rate, was the way to go. And there is also a lot of pain that will be felt by people who pay personal income tax, in the sense that they don't get the full bracket relief for inflation. So
what do you mean by that? Just explain the bracket relief for inflation.
Essentially, if you get your full relief for the effect of inflation, it means that your in real terms your income stays the same after tax. Whereas if the tax remains the same on a nominal amount of income, in real terms you earn less income and you have less spending power left after that. So the Minister of Finance traditionally likes to give relief for inflation and for the so-called fiscal drag effect, but this time round he saved some money, and there's an additional about 6.8 billion rand that will be earned in tax revenue by not giving that full relief. The saving on the VAT side, or the extra money on the VAT side, is about 22.9 billion rand on the other hand.
Sure, it's a lot of billions. We're probably halfway there to plugging in that hole. That's 48 billion, no, not as bad as the 51 that we had thought in the medium-term budget. But Tracy, your impressions?
Well, following from what Erika has said, I think it was a tough but hopeful budget. It could have been a lot tougher on personal income taxpayers. I think a lot of harsher measures were predicted which didn't come through, but that's appropriate because the collections from the personal income tax base are not where they need to be, and that was acknowledged quite strongly by the Minister.
What's compliance looking like?
It's not necessarily compliance is the issue. He also acknowledged lower wage increases, lower bonus takes, and you've raised the point now. There was also a question mark around tax morality, and from a pure tax perspective, I think it's hopeful that tax morality looks like it is being tackled quite strongly in this particular budget. We are seeing measures at SARS, a commission of inquiry into the governance at SARS, more powers to the tax ombud and independence, the Auditor General getting more spending, accountability of SARS to the Minister of Finance, which is in line with what the Davis Tax Commission wanted, the establishment of a supervisory board. From a tax morality perspective, they've finally tackled the problem that it's on both ends. And I think that's welcome from an industry perspective. And also corporate income tax, not increasing it is exactly in line with what was predicted. We are looking at the top end, which was acknowledged in the budget. According to global trends, our 28% rate is starting to look a little bit high. And they did acknowledge the threat then that potentially corporate taxpayers would look to shift their profits to a lower tax base, but a lot of measures have been put in place already to curb that.
And Tracy, you know, we did speak off air and you were saying that he kind of signaled the possibility that our company tax could actually go down in future.
I think the door was opened by putting on the table all the competing tax rates internationally, and the fact that we are desperately looking for foreign direct investment. We need to make South Africa an attractive hub. What he also put on the table, which was very promising, is looking at incentives. Actually talking about looking at incentives and a review of incentives, looking at the special economic zones. You know, that actually puts tax to where it needs to be to create the economic growth that we've been looking for.
Okay, so if we just sum up, so personal income tax remaining relatively the same, VAT we did discuss, it's going up by 1%, corporate income tax he didn't touch. Customs and excise duties, what was the change there?
On the customs and excise duties, not so much on the customs side, but on the excise side, increases in the excise duty on luxury goods. For example, motor cars, where the rate has gone up from 25% to 30%. And what I found also very interesting in the fine print is that smartphones will now be classified as cell phones, and it seems as if there might have been a bit of a gap there where they weren't classified as such, and that there will now be tiered excise rates applying to different smartphones or cell phones, depending on how luxury they really are.
All right. So you're possibly paying more. Oh gosh, smartphones are really expensive, or so expensive as it is, but we're possibly paying more because this is considered as a luxury good.
Yes, yes, yeah. And that ties in with the other increases that apply to, you know, the wealthier, like the increase in the estate duty for an estate greater than 30 million, where the duty will be 25% and not the 20%, which is the standard rate of estate duty. Similarly with donations tax.
Elaborate more for me. I mean, Tracy, you touched on donations tax before we spoke. I didn't even know that there was a donations tax. How does that work? What does that involve?
So currently donations tax is levied at 20% on the value of the donation. There are a varying range of exemptions from that. But donations tax normally works in line with estate duty so that there can be no arbitrage between the two types of taxes. So where estate duty is now being increased to 25%, only on estates more than 30 million. Donations more than 30 million in a year will also attract that 25% higher end rate, which is hitting a personal income tax base, but at the higher end, which brings back in line the progressive nature of our tax system. So I don't think those changes are necessarily out of line.
Well, so when we're talking about donations tax, we're talking about, say, for instance, if a company donates to what, a charity, like in that way, or what?
You get corporate income tax deductions for that, but just any donation. I donate money to you. I donate money to Erika. That attracts donations.
Do people declare
tax.
that though as donations?
They are supposed to. Yes,
they're supposed to. Being the operative word.
I think the biggest donations tax talking point at the moment is on Section 7C, which is a new section that came in last year, effective 1 March. Where interest-free loans to trusts have been targeted as a particular form of abuse and will now be taxed the interest-free portion on that loan to a trust. The penalty is donations tax, and it will come in now. It's payable by 31 March.
All right. Okay.
So we were possibly predicting an increase in the donations tax rates to catch those, which it's not going to necessarily.
Oh, right. But then afterwards, the usual increase in tax on alcohol and cigarettes. I mean, what does that translate to, the 6 to 10%? What does that translate to in rands?
I heard that on a can of beer, 14 cents. I managed to remember that one.
so not much. So not much there.
You must be a beer drinker, Erika.
Not much in terms of the increase in alcohol and cigarettes then.
Another interesting one is we were all waiting for NHI, the announcement.
Yeah, he did
funding.
touch on that, yeah.
So where he's touched on it is to say there will be below inflation medical aid tax credits over the next 3 years as a measure to fund NHI. That was the only talk I could find on NHI at all, which probably looks at delayed implementation, which is in line with the SONA speech, the President's SONA speech from last week, that there is a lot of work to be done on NHI. It is definitely still on the radar though. So the funding of it has always been completely topical. A VAT rate increase was always talked about to fund NHI. What they've put on the table is it working with the medical aid tax credits. They're not simply taking them away, which I think what was feared, but they're talking about a below inflation increase over the next 3 years to start creating funding for it, which is probably well thought through. Okay. And he also mentioned a 52 cents per litre increase in the levies on fuel. This was expected, I suppose?
One always expects an increase in the fuel levy, but I think it's quite a high increase. In absolute terms, if you add 52 cents per litre of fuel, I think that could have quite a big impact on a lot of people who are already impacted by the 1% VAT increase, because everybody uses fuel directly in their own transport, but also in the transport of products that they consume. So that is quite a high increase.
But it's better than, I mean, there was talk being mooted that we could possibly have a VAT being, or fuel being taxed at 14%, 15%.
So what was already spoken of was taking away the zero rating on fuel, which would immediately bring in 14% on fuel purchases. But that hasn't been taken. But in line with that, you could then not increase the fuel levy. It kind of was a one or the other. Otherwise, you're taxing the same sector far too harshly. So they seem to have rather gone with an increase in the fuel levy. It is as regressive as VAT. It touches everybody. But it seems to have been a revenue mechanism every year. Of that, they said, of the 52 cents, 22 cents is going to the general levy and 30 cents to the road accident fund. So 22 cents of every 52 cents is going into the general tax revenue. To be spent.
So that's a good thing. But anything else stand out in terms of the tax announcements that were made today? Not really.
There's some interesting things that they foreshadow for the future, like an asset mine drainage levy paper, that will come out. And I think there are quite a lot of movements. There have been over the last few years, with sugar tax coming in now, carbon tax probably.
That's coming in April.
That's right. And then carbon tax probably also being promulgated this year. Then there's asset mine drainage tax, which I question, are mines not in any case making provision in terms of other legislation? Is tax the instrument? But that's another debate for another day. And also further work that they're going to be doing on environmental levies and taxes. So I think there will be quite a few things to look out for. On the environment, they're increasing the plastic bag levy by 50%, the levy on light bulbs by 33%. So you can see the direction that those things are moving in.
All right, I suppose it will definitely encourage a lot more shoppers to recycle more and be very conscious about how they use those plastic bags. I thought that they were expensive as it is. Welcome back. Of course, I'm still joined in studio by Erika De Villiers, who is the head of tax policy at Sait, Tracy Brophy, who's SAICA National Tax Committee Chair, and joining us in studio as well is Zweli. Zweli, I'm so sorry, I do not have your last name here with me. Perhaps if you can just introduce yourself for us.
My name is Zweli Mabhoza from Priority Tax Solutions.
Thank you so much for that. Zweli Mabhoza from Priority Tax Solutions. I've asked the ladies, I'm asking you, your impressions on the budget?
Well, I don't think that there are any major surprises, because in terms of predictions, A number of people predicted that there's going to be an increase in VAT. Although, personally, I think that I hope this is only temporary, because we are here because we did not manage to contain the expenditure. It's something that could have been avoided. It's something that is going to affect the poor of the poorest. Because even if you talk about zero-rated aspects, it's only brown bread and, you know, people, they have to buy clothing, and clothing there's VAT, you know. So all of those things, they are actually, they are going to impact people, you know. And people, they eat other things other than just rice, you know. So all of that is going to impact people. So I just hope that it's something that is going to be temporal. I have also seen that they are now talking about, it's almost a phasing in of this national health insurance, in the sense that they are saying that now they are going to reduce the medical aid credit, the contribution for medical credits that you normally get. And then they say that part of that amount is going to be used to actually fund national health insurance. And it's something that has been on the cards for a very, very long time. At some point, they said they were going to fund this with some payroll taxes, and now it's actually going to be coming from the credits that people get for contributing for their medical aid, which I think that it's more like a question of taking from other people and giving to other people. Our biggest challenge basically is the promises that politicians are making to the people. They have to fund those. So although the intention is mainly to say we want to fund the debt that is growing, but I think the promises are also growing. If you don't believe what I've said, just go and listen to the speech that has been made by our state president recently. And if you take, for example, just to do things like a lifestyle audit, you need resources to do that. To just investigate one individual, how much does it cost?
Yeah, but
so
then
all I'm saying is that it may be necessary, but it's something that is really going to be quite costly. So I
costly
think
in the short term, just as the finance minister has announced in his budget. So painful now, but ultimately better for the overall outlook of the economy going forward. I mean, we know a lot of our ministers and public servants have been living beyond their means with money that could be better directed elsewhere.
I hope so. I hope it's going to be in the short term, going to be something that is going to help us. But if you think about the whole cabinet and you say, okay, how many of those are holy cows? And you think about the cost of doing that. That's all that I'm thinking about, is to say, if you think about national government, provincial government, local government, got corruption everywhere. Where do you start? And I'm not saying it should not be done, but I'm just thinking about the cost of doing that. And the commissions that have been promised, you're going to have a commission that is going to do this, the investigation that is going to do this. All of these costs, they can even take the whole 1% that we're going to have on VAT.
Tracy, do you agree?
Absolutely.
You're saying that because you happen to like Zweli.
No,
Honestly,
Zweli,
do you agree?
We were talking before air that Zweli normally brings a very good perspective. But you asked earlier if there's anything else in the budget that, you know, we can think of. And the thing that sticks out for me, it was in the tax policy section, is expenditure or losses when it comes to state-owned companies. Now, there's a lot of talk in the budget about reining in state-owned companies. And to your point on, you know, limiting expenditure, why are we here? Because they haven't been able to rein in the expenditure. So there's a big focus on state-owned companies. And the point is, expenditure losses classified as fruitless or wasteful won't be tax deductible. I mean, we're alarmed that they were tax deductible in the first instance if they were fruitless or wasteful. So I just think that the spotlight on state-owned companies is honestly being shone brightly in the right direction, even from a tax policy perspective and just from an overall government spending perspective. I don't know how susceptible this particular budget, which is quite moderate, is if we were to have a failure in state-owned entities. I don't know then if the amount that they're looking to raise in tax revenues would be sufficient. I don't know if we've got a lot of wiggle room.
You clearly don't agree there.
Well, I agree. I agree that, you know, our government guarantees to state-owned enterprises at the moment, according to the budget documentation, is 466 billion rand, of which a very large portion is to Eskom. And we know the kind of trouble that Eskom is in. So I think that is just the biggest risk to us. There's just no way that we can raise taxes to make up for a failure of Eskom. We just have to.
Is raising an interesting point that I did not pick up, Tracy.
There's favoritism going on here.
Thank you very much. But I mean, if you think about it now, you're saying that here you have a parastatal, they're not going to get a tax deduction because they've got wasteful expenditure. And then the next thing, then they must go and pay tax, and then they go and pay tax, they come back to you and say, give me more money. Because, and again, the question that you need to think about this from a policy point of view. You have these entities, you're saying that they must be treated as private, okay? In the private sector, it does not mean that you don't have fruitless expenditure. But the thing is that now, there's no legal requirement to disclose that, you see? So all of those things, I think that at some point, someone needs to actually think about this and say, what is the end game? What do you stand to gain on these things? I think that they need to close all these particular loopholes that you have from a tax point of view, and now they've got country-by-country reporting, which is also great. But all you need to do is to say, now, this is what I want to achieve in terms of collections, but at what price? Because now it means now the tax authorities, they must have staff and we will be trained to say, okay, fine, now we can be able to administer this country-by-country reporting, which is also not something that is a walk in the park. It's complicated. So you need to actually count those costs and say, okay, this is what we want to achieve. Yes, you want to achieve something. So it's the same thing with what we're talking about here, the fruitless and wasteful expenditure. It's always great to say, no, let's make sure that they don't get tax deductions, but they are going to come back to us and say, and then we're going to see another increase in VAT.
Well, let's leave it there. Unfortunately, we are out of time for this panel right now. Thank you so much for being with us. I'm joined, or saying goodbye rather, right now to Erika De Villiers, who's Head of Tax Policy at Sait. There's also Tracy Brophy, who is the SAICA National Tax Committee Chair, and of course, Zweli Mabhoza, who's founder at Priority Tax.